There ain't nothing like financial drama now, is there? Welcome back, everybody. We gotta talk about the most recent drama with First Republic Bank, which was down 47% yesterday, and it's up 23% in the pre-market. Now, we got everybody and their mother trying to save this bank, okay? We've already had two banks collapse. Silicon Valley Bank, which made a bunch of clownish investments in long-term debt securities. Signature Bank, a clownish crypto bank. And now we have First Republic Bank teetering over the abyss. Now, why are we trying to save this bank? And by we, obviously not me. You think I can afford to bail out this bank? I'm talking about the bankers, spearheaded by Jaime Dimon. The government and the Federal Reserve, they're all trying to keep this bank afloat. Because how these panics work is that if one bank falls, pretty soon another bank falls, and then another, and then another, and then soon they all collapse. Even the mightiest of titans could potentially collapse if a bank panic got bad enough, because people get so scared, they rush and pull out their deposits, regardless of their own self-interest. And trust me, it's in most people's self-interest to not pull their deposits out of a perfectly functioning bank, because you will inevitably force it to collapse, and you'll destroy it, and probably lose all your money. So, let's talk about what's going on. Why is the stock up in the pre-market? Well, first of all, we've been assured that the federal government and the Federal Reserve are firmly behind making sure that the entire banking system does not collapse, okay? We have a quote here: the Federal Reserve is providing additional support to the banking system with a new lending facility. This will help financial institutions meet the needs of all their depositors. The Federal Reserve, one of their jobs, is to be the lender of last resort. When banks run out of cash, when everybody's panicking, the Federal Reserve, the central bank, the bank of the banks, is there to come in and say, hey, here's some cash. Okay, you need some cash to meet these short-term deposit requests. Yeah, you can pay me back later, okay? That's what they're there for. And if we didn't have the Federal Reserve, which everybody's, there's a conspiracy theory, If we didn't have the Federal Reserve, who would be the lender of last resort to these fledgling banks? The other bankers. And what if the other bankers fail? Well, we need somebody in there in the background kind of keeping the whole ship together, okay? That's the Federal Reserve. On top of that, we have the FDIC stepping in. The FDIC is there to insure people's deposits. And there was even a very controversial action where everybody's deposits were insured at First Republic Bank. Not just people with $250K or below. Everybody's deposits were insured. Now, that's normally not how it works, but they're trying to stop people, that being the government, the FDIC, the Federal Reserve, they're all working together to stop people from panicking. Stop taking your money out of these banks. This is the reason they're failing. Now, to see the scale of what's going on here, the Federal Reserve has lent $300 billion in emergency funds to banks in the past week. And that's as of March 16, 2023. That is absolutely insane. Now, nearly half of that went to Silicon Valley and Signature Bank, and I bet you a pretty decent chunk of that has also gone to some other regional banks, kind of like First Republic Bank, but we'll never know, or at least we'll know sometime in the future, okay? But the Federal Reserve, they're giving out money like freaking candy, okay? And they even have a new lending facility of $12 billion to enable banks to raise cash and pay any depositors who withdraw money. Now, the last-ditch effort, on top of all these actions, temporarily, I guess, bumping up the FDIC insurance limit. Federal Reserve giving out boatloads of cash to lend to banks. Now we have a bunch of bankers themselves coming together. This has happened in the past in the United States. I'm no economic historian, but I know there's been several occasions where the bankers have come together, and the bankers have basically bailed out the financial system because it's in their self-interest to do so, okay? So for First Republic Bank, we know the bankers deposited $30 billion. Multiple banks cumulatively deposited $30 billion into First Republic Bank to stop it from collapsing, okay? They actually care. They don't want this bank to go under. That's pretty encouraging to me, okay? They deposited $30 billion. And on top of that, they're now considering converting that deposit into a capital infusion, which means instead of the bank eventually owing the other, instead of First Republic eventually owing the other banks back, well, now they just have shares. They've just given out more shares, okay? So if you're an investor in First Republic Bank, or if you're a speculator, which I imagine if you're buying First Republic Bank right now, you're speculating. Number one, you got absolutely clapped, okay? The stock was at $115 not too long ago. It's now at $12 per share. That is absolute destruction. We have S&P cutting the bank's ratings down to basically right below imminent risk of bankruptcy, okay? There's a lot of drama going on here. But if this bank is to be saved, I think the government, I think the Federal Reserve, and I think the other bankers are going to fight tooth and nail to make sure this bank stays alive. And what happens to the investors? I can't necessarily tell you. But what I can tell you is that there's a chance you could make money off of this, and there's a chance you could lose all your money. Because if this bank gets sold off potentially, well, then you could be selling your shares for pennies on the dollar. Hope you enjoyed the video. Talk to you soon.